in these times of higher inflations, myself personally, is that, yeah, I am a little bit sort of, curious about not spending so much on on things, and I think that we're all a little bit like that. I think that the higher inflation and the higher interest rates, and many of us got like a loan going on, and paying costs, and those costs are getting sort of higher. So I wonder how these companies are making money as such, and we've got the earnings coming out 14th of April to the 20th of April. They're the early ones. There's some big ones in there as well. So we're seeing the market rally, but I really think it's like buy the rumour, sell the fact. And I think that we'll probably need to be really quite sort of careful. So the wave count that we're working to the upside at the moment, it's nearly the end of March now, so there will also be bookkeeping at that point in time as well, and so I see the market rallying up for the next, say, 10 days, and that will bring us into the first sort of earnings of some of these bigger stocks. So I think that we need to really prepare. We can trade long, and and I'll nail that down and give us the intraday pathway for that. But I think that when this particular 5 waves that we're looking for to the upside completes, that's when the earnings will start. And that's why I asked my question, to myself, am I saving money? Are we all doing it? Are companies going to have good profits in this earnings from the March earnings? I think a little bit of common sense could prevail here. That we're looking at JPM here at the moment, and we can see that we've got a sort of a 3-wave move to the upside here, and then from here we got 1 2 1 2 here, and then sort of 3 4 3 4 5. So this is a bit like BAC that we'll look at, but I'm thinking that we'll have that rally, and then we'll have this sort of situation happening. That's what I think's going to occur, and this will be the recession that they need to have, that the Feds are looking for, because the Feds are not, but they've been pretty clear, they're not budging on anything, so they'll budge on this, they'll make a change on this for sure. But yeah, look, I think this is Morgan's, and I think this is where the market is now. As I've always mentioned, as I've not always mentioned, but as I have been mentioning, there are markets that have come down like this. Now, this one here has come back up sort of 50%, let's just say, give or take. So there's some markets that have come way up here. There's some markets that have just come a little way up, like the Googles of the world, So these ones that have come up a little way, they're going to have a deeper move down here. And these ones up here, they might not make a new low, the Apples of the world. They might end up just having an ABC and then going up, and they'll all turn together at that point. But I think that we're sort of up here on all of these, That's what I'm thinking. So I'm pretty clear at the moment about how this is going to finish off here. So that's the good news. And for us as traders, I think this third wave here is good news as well. Okay. Anyway, that's my little sort of thoughts for the day, so to speak. Of course, I can be wrong, but yeah. I don't know. I'm starting to think that this would be the way. So with the NASDAQ here, the NASDAQ has been the strongest, these tech stocks. So these are going to be, and it just makes sense, doesn't it? These will be the last two to top in that way. So I'm thinking that we end up at around this old high here, which is around the 50% mark here. This is a weekly chart for this market, so we'll end up here. Now with corrective waves, there's I can put a bullish spin on all of this too, by the way. But for the bullish spin, I would need this little move up here to finish, and we'll talk about that. And then anything above that, then we can look to be long at that point. But as we approach here, it's better to prepare for this because it's going to pull back anyway. It's a bit of a rinse and a repeat that we did a little bit in here before. So yeah, I lost my thought of my thoughts there for a moment, but yeah, to this high here, which is roughly the 50%, from this sort of move here. Yeah, that's right. Yeah. So as a corrective pattern here, corrective patterns, sometimes they're simple, sometimes they're a bit complex. This one's really reasonably quite sort of simple, but you could count it in different ways. I'm a bit of an ABC man, so I tend to go that way because folks are learning Elliott Wave, and the simpler you can keep it, the better for everybody. If you start double XYing everything, in some cases it's okay to do that, and it's fine. But it's a little bit like a joker in the pack. You can kind of WXYs until the cows come home, and Practical was the one that put in the extra X wave that wasn't part of Elliott's original idea or observations. But yeah, everything changes and take things on board. But anyway, the reason I do that is just to keep it simple. So in this case here with the NASDAQ, I won't be looking at the S&P this morning in this video, because I'm just spending a bit of time just shooting the breeze here. So in a way, we're looking at it like this here. So this will take us roughly to that old high that we're just talking about. This is where we looked at being short before, a little bit here, but yeah, I was in two minds about that. So we need to look at this here quite simply as wave 1 and 2 here, and 3 here, and 4 here, and 5 up here on that there. And it will be this top here, which will take us into the beginnings of the earnings, I think, or just be, at that time, I don't know, around pretty close. Do you know what I mean? Yeah, so our job is to look for 5 waves up here, and this will be the same for not all the stocks, but most of the stocks, the main group, the consensus that I always look for to try to understand what's actually going on. So this little 5-wave structure coming up here, let's just go to the 1000 tick area here, and yeah, so let me just get in a bit more data here. So just picking it up from this B wave here, and we're going up into a C wave here. So just as I pointed out before, we've got 1 and 2 over here, and 3 and 4 here, and then we're focused on this area here. So that gives you a bit of an idea where we are now. And look, as I mentioned before, I can easily be wrong, but all I can do is, I like to have a look at both counts and so on. But what I can suggest is that when we get to this top here, then this will be about when earnings are coming out, and I think we need to prepare to go short, but it'll be pretty obvious. Well, hopefully we'll have wave 5 here, and we're going to have a little ABC pattern here on this sort of pullback here. Then we'll have wave 3, then we'll have wave 4, and then we'll have wave 5, and then here, this is where we look to short over here for this. Now, it will be a bit of a risk because we're shorting against the trend again. So a bit of a rinse and repeat of this one, but I feel a bit better about this because I've got sort of a few other things lining up at this point. If you want to go long in the market, this would be the B wave long here for this. So it will be a wave 2 pullback here. We'll see, this is what we'll be working through in the stocks that we look at today. So we'll be looking at a little dance across 13,000 here for this. So we're looking at 1, 2, 3, 4, 5 up here, ABC, and then up again. So anyway, I won't go into that too much detail. What I just wanted to point out is that just to give a bit of a story about this possible top area here and what we're going to do about it, and how that matches up with the fundamental side of life. That said, the other interesting thing too, I think, is I'll leave that. I don't want to confuse it. Yeah, sorry. Okay, so Apple here. So with this 5 waves that we're looking up here as 1, 2, 3, 4, 5. I got them in blue here, so it's a little bit confusing for the other ones, but it's the same pathway for all of these stocks. Okay, well, most of them. So in this case, we've got 1, 2, 3, 4, and here we're going 1, 2, 3, 4, 5 up here. So we can take this up here because this is one of the markets that's moved quite high. We can look at it, as a wave 2 pullback, but it may come quite deep. We'll see. But here we're looking at 5 waves to the upside here. I'll just have a look at the for the trade setup here for the long side. I'll just go into 100 ticks here. I may have updated it here a bit. Okay, so yeah, I was thinking it's a bit of a weirdy sort of wonky old sort of thing here, but from this wave 4, I was looking at 1 and 2, then 1, 2, 3, 4, 5, the third, the fourth, and then a bit weird in here, but I did look on the 10 tick chart, so 1, 2, 3 here, an A and a B and a C for 4, and it has moved up since I've done this, so that's good. So there'll be 1, 2, 3, 4, 5 up here for this, so there should be some sort of little correction that comes in. Just keep a bit of an eye out for that. And what we could, so basically you can count 1, 2, 3, 4, 5. So up at the 163, we'll see some type of sort of thing here, and then going up at that point, So, as the young folks say, buy the dip, dude. Yeah, so we can just push that up there further. So really a classic trading levels pattern across 163, which will be the top of group 1 of 160. Look, this might pull back deeper in here to a thing. I'm not quite sure, but you know what a classic trading levels pattern looks like up there, and it'll be like this: the arrival. You just have to wait for the first high, and then once you don't have to worry about anything. You just wait for the first high to come in, and then the market's going to drop, and you don't worry about where it goes at this point. You just, because you got that top, that's your saving grace, and then you can come to the second one here, and you don't know how far it's going to go down, but if it goes down and comes back up and gives you another little classic trading levels pattern here, inside of this little simple move here will be this pattern here, this bigger pattern here. So this will be the arrival, the reaction, the first high above the level, the ABC correction, and then up again at that point. So you're just working down from the top. You don't get the best price, but you could get the best price if you go lower, but I suggest using less capital, a lot less capital at that point. Because this way here, you can actually manage your initial exposure much better. I mean, you could do it lower as well, of course. Anyway, many roads to Rome, and my way is not the only highway in town. So, Amazon, I won't bore you to death, but the same thing: an A wave, a B wave, 1, 2, 3, 4, 5 up here. So could come up here higher, and yeah, I mean, it's the 31st today, and it's Friday. So I think it's the 14th where the first one comes out, but I'm not very good at looking at reading the news. I should, but I'm supposed to know everything, but I don't. But anyway, we can all have a look at what's what, and I'm sure some folks will help me out and tell me who does what first and all the rest of it, and we can share that and we can discuss it and so on. Yeah, so the other thing I wanted to say as well, the new website, the second new website, is coming along quite nicely. Hopefully I'll get a bit of a viewing of the developers in India that are doing the, for the folks that know, the old Profit Keeper, but that will be the new stock portfolio. So I'll get a viewing of that in a week or so. So that will be good. And Linda in China, she's doing all the UI UX work that the UX team did in Sydney. So they're putting all of the insides of that site together now at the moment. So we'll have, it should be quite good actually, because we'll have stock prices. I've got a really good stock price feed. I've had to bow down and get pay for good crypto prices for the crypto portfolio, and for the stock prices we'll have companies' earnings and all those sorts of things in there. This is NVIDIA, so should be good to 300. Yeah, just continue to hold on at this point. I mean, it's such a nice number to fail at anyway, to top at, let's say. So yeah, it'll still take a little while to wingle through groups, but see how it's sitting in. This is the important. I mean, 65 here. You can see that it was the top here, and then it's it's firmly in here now, and now it's creeping through 72. This is where I'd be adding to it here, or on the pullback here as well. Doesn't really matter depending on what you're doing, but we should be good to until the first earnings things comes out. Whether that's to the 14th. So to speak. Meta platforms here, same as well. So we're looking at wave 1 and 2 here. There'll be a little ABC pattern that you could buy into here, and then 3, 4, and 5 up here somewhere. All of that sort of stuff. So yeah. Okay, that's that. I won't bore you to death. This one's a little bit different. Netflix has got me stunted a little bit because I've got to we're at the 61.8% here, which is not a big deal. I'm just going to, I should leave that there. And yeah, I think it's going to climb higher. I've got 5 waves here, so 1, 2, 3, 4, 5. That's how I had it. But then I was thinking, well, how do I get to it? How do I make a top out of this? So I've got the A wave here, the B wave here, and then 1, 2, 3, 4, 5 for 1 here and 2 here. So this move up here is 3, 4, and 5 up here. And that will give us the same timing of everything else. Now I've just got it in shadow sort of form here for this. But yeah, if you're trading long in this, you can expect to be above the 350, maybe even 365 at this point. So that's one of the ones that are not quite there. So Enphase here. Yeah, I was having another little bit of a look at this. Now, we're on the 50,000 ticks here, so we want to have a look at the bearish side. So I was thinking that about this move down here. I think I could put the A wave over here, and do some type of fancy footwork correction across here, but I'll just keep it as simple as possible because the other ones are going to be rallying to the 14th, say. So it's 2 weeks. So we've got 2 weeks of rallying here. So I just wanted to look at it this way here with 1 and 2, and 1, 2, 3, 4, 5 for the third wave, and or WXY here for the fourth, and then the A wave here, then an ABC coming back up into between here and here on this. So a little bit more of a move up there, and then we come down to around the 150 at that point. So it is a bearish take on it. I can see that lithium stocks have pushed up a fair bit, not the Chinese side of things yet, but there's been a few sort of takeovers or an Australian company wanted to be taken over by an American company of lithium. So yeah, it has chirped things up a little bit. But I can't go. I mean, I could use this as wave 1 here. I could do that. But I think one of the things to do is that if we got 5 waves here, that means we're going to get 5 waves over here. If we're going to get 5 waves over here, if I just draw that up here, for instance, then anything above those 5 waves, then we could turn bullish at that point. Okay, I think that's probably the best way to look at it. And then we've got like 14 days to create that 5 wave structure there. So I'm going to go from there 50k to 1k and just drill in around this area here, and this is what it would look like here. So 1 and 2, 1, 2, 3, 4, 5 for the third WXY here, and then 4th and 5th down here, and then the A, the B, and the C wave up here, and we've got the same as what we're looking at with those other markets. So we'll have 3, 4, and 5 up here to the 14th of April, roughly speaking. Now I can count this a little bit differently here, but there is overlapping wave structures. Looking at this as 1, 2, 3, 4, 5 here, which is on the 100 tick chart here. I'll show it, but and you can throw stuff at me if you want, but so this is 1, 2, 3, 4 here, then 1, 2, 3, 4, 5. I'll just sort of, I know there's a problem with it from the overlap there and things, but maybe I can look at it, in that sort of ending diagonal sort of situation here, I mean, it's a long shot. It kind of doesn't matter in a way, do you know what I mean? I think all we need to do is just follow this little move up here, like with the other ones, and then anything above that, then it's going to be bullish, because this would have to be wave 1 then, and 2 then, and either 3 or 1 and 2 and 1 and 2. But it doesn't really matter. It would be telling me that anything above that 5 waves would be telling me that we're going up at that point. And the thing is once we get up here, see, at the moment we're kind of like, oh, it could go up, it could go down. We're down here low. So our perception, our emotional perception of this is kind of on the weaker side at this point, But when we get up here, we'll be more bullish about the situation. It'll be difficult to look at the short side, but that's what we'll need to do once we get there. So yeah, we'll just have to work through it. We'll work through the long side and the short side of it. But I think looking at, the banks as a starting point and yeah, I mean, stocks like Apple and Tesla and NVIDIA that have gone up quite strong, they deserve a good correction, don't they? So it's not out of reach. So Google's one of these ones that hasn't really risen off the bottom that much. So this is the 50k bearish side of things here, which would be looking at a whole leg coming down here. Maybe I've got this too far coming down. I wouldn't pay too much attention to that at this particular point in time, but just this wave 3 at 161. I mean, just roughly speaking, I wouldn't pay too much attention to that. Yeah. Also, Google in the in the off hour. I don't know if you call that pre-market or curb trading or whatever. Did have a spike come in here. And they haven't given it to me on this particular platform because yeah, it happened outside trading hours, I think. So, or it may have even happened in the other Google, but the thing is that it doesn't change the wave count at all. Okay, so if you're thinking about that, so yeah, I mean, I'm thinking here that the move down here as wave 1 and 2 and 3, 4 and 5 down here, this type of thing, because it's, it just hasn't gotten off the top here. Do you know what I mean? And it, it hasn't rallied back up to its 61.8% and all the rest of it as well. And yeah, I could look at this as being positive as well. I could go 1 and 2 and 1 and 2 here, and then I don't really have, I could do on that spike. No, the spike didn't actually make a new high above that there, did it? It stayed under that high. I don't know, did it? I could go double check now. I'm going to stay with this. So from this one, just so you've got this here now, on 1000, from 50 to 1000. So we're looking at, yeah, that spike. I think it stayed under wherever it was in here. I think it stayed under here for this. So I don't think it's changed anything really, the way I see it. So we're just looking here really. Don't worry about that green thing just yet. I think we've got one more move here, and then we'll have our ABC. So this one hasn't really rallied like the other ones, So this is, this is the short trade that we want to be involved in at that point, and we'll probably get in positions up here with this as well. So we'll get to that when we get to that. I will go to 100 ticks just to organize this in here, just so on the same page. So from wave 2 up here, we've got 1 and 2, 1, 2, 3, 4, 5, the third wave, fourth wave, 1, 2, 3, 4, and perhaps wave 5 down here. Maybe we got it already on this one. I don't think so. 1, 2, 3. I'm not quite sure. Doesn't really matter. Let's just see how it plays out first. But obviously it's not rising like the others. So yeah, this is quite a good fit at this point. So, and you know, it'll take 2 weeks to finish off and do all of this, and it doesn't really matter. Whatever happens, you know, we'll end up shorting it under here, under the 100, once it, if it becomes the retested resistance here, and this will be one of the first ones that we can short, because it's going to be one of the weakest, and it's always good to short the weakest and buy the strongest. Yeah, so that's that. I won't go, that's all good at that point. I don't need to go any further here. Microsoft, so yeah, wave 4, but this is just the 29th, yeah, so the 29th here, the same as the NASDAQ, 1, 2, 3, 4, 5 up here. So you can go long. This will go up here, as you know, this will come back and check it at the 80 here. It hasn't, you can see how it's, you know, it's had a breakout here, right? But this is the level, this is the number. So it will come back and check it at some point. So that will be the buying opportunity. And of course you can look at this in terms of, let's just draw this out a little bit. So I'll just put this up here. There'll be some sort of ABC pattern here. So you can go long here, of course. Yeah. That will all be the support. It probably dip down on that a bit. But that's that. And Berkshire Hathaway here. So we're just going to see this climb up here further. Probably hit this trend line as a rough guess. I don't know. And then see it roll over from that point, you know. We've got the bullish side of it as wave 1. And ABC for wave 2 sitting under here for that. Our short trade at last resort will come under here, under this particular low here, but obviously we'll try to get a better position on that. So nothing to do here. I wouldn't even, you could trade that long if you wanted to, but I think there's better trades. It's not, it's, you can see that it's not going anywhere, and there's too much supply here, you know. Tesla, I won't go into all of this. It's just going to, as I mentioned yesterday, it'll go higher, but and take this top out here, but it's not going to give you the risk reward factor. It's not going to give you the reward that that you would be looking for. There will be better markets like Apple and so on for those. With block here, we can just still expect it to dance in this space until the 14th and then drop. Okay, so you can see this move up here is all on lower volume, but even if it does drop here quickly on some sharp sell-off or something, it will try to recover as well. So the trend to the down, it's not free to go to the downside just yet, unless Hindelburg backs up their data, you know, in terms of you know, criticizing this market. And look, maybe some skeletons will fall out of the closet, you know. They need we need some excuse for this to come down, you know, so to speak, you know. So yeah, I mean, we have to put this, I wonder if I have to put this here. There's no other way. Anyway, we'll get there. Whoops. And Bank of America. You know, so when we looked at, you know, we've got this here logically as wave B here with 1, 2, 3, 4 and 5 here for wave C. So that looks all quite good, but you can kind of, if I bring this back across here as an example, we can look at this as the A, and that's the high, up here is the B. So in this case, we've just got the first 5 waves down here. I mean, I could look at this bullish, and I could put this as wave 1 up here, and wave 2 under this low here as an expanded flat, and we just move up from that point. So we'll keep an eye on that, of course, but otherwise, that's from the top to here, that's 5 waves. So we'll need 3, 4, 5. So that's got to come down a fair way, doesn't it? I mean, it's, so when you think about that, you can kind of think, well, this whole move down here could be wave 1 and wave 2 if we've got it, And this is a weaker one because it's taken out the lows here, hasn't it? Where Morgans haven't taken out the lows here. So this one could, end up not at 20, but a lot lower here, This could end up being, 1, 2, drop fast here, 3, 4, 5 here, and then have the 4 and 5 in here. So like a $10 stock, $10, $15 stock. Because it's the weak. I don't know why it's the weakest. I haven't, I mean, it just is, but I don't know why. Anyway, that's that's all of that. Okay, so anyway, thanks for tuning in, and enjoy the weekend. Cheers.